Nothing in this recording is intended as investment advice, and the people in this recording may hold positions in the companies they talk about. Do not make any investment based solely on a tip or recommendation. Please do your own research.
Hello and welcome to Zak's Traders Cafe. Today I'm joined by Brian Raven, who's CEO at Tavistock. How are you today, Brian?
Hi. I'm good, thank you.
Right, you had some news out earlier in the week, but maybe the first thing to do is to tell everyone what Tavistock Investment does.
Sure. Well, Tavistock Investments is a financial services operator. We now provide financial advice only to high net worth individuals, having recently disposed of our two networks of RIs and appointed representative firms. We provide a protection network. That's a national network across the UK that we acquired about 18 months ago. And we do a small amount of asset management through a DFM providing model portfolio solutions. As per the announcement that we made, well, various announcements that we've made recently, as I say, we've disposed of the two networks to Saltus. That transaction has just completed and we received first consideration payment at the end of last week. And we have also announced a transaction to acquire an asset management business called Alpha Beta Partners. The direction of travel for this group is continuation of face-to-face advice to high net worths, expansion of the protection network to also include mortgage services, and a change in direction as far as asset management is concerned, essentially built around the Alpha Beta acquisition, where we are going to provide asset management capability to firms, advice firms and networks rather than through our own advice businesses. And also we're going to sell direct to the consumer.
So basically a bit of a repositioning, lots of cash in the bank, I presume, still after all your rejigging.
Yes.
In terms of the lay of the land, the headline in the Telegraph today is that, the 14-year sort of low in terms of companies on the stock market, FCA, etc., not big on retail investors, so I can understand the high net worth angle that you have. But what's the lay of the land with, the budget and all and things like that? Isn't it a tough environment for you?
Well, the financial advice game has become an increasingly tough environment for everyone, I think. We had our sort of 10th anniversary in 2023, and that really was triggered a strategic review and us doing a sort of honest assessment of how good, bad or indifferent a job we've done in the various sectors in which we operate. And also looking at the for want of a better expression, direction of travel in the industry. And if you look at the financial advice market, the regulator has become increasingly active, which is no bad thing, over the 10 years we've been in business. And most recently, perhaps, Consumer Duty got the biggest headlines. The outcome of that has been the cost of providing oversight to both employed advisor businesses and networks has increased significantly. And there's probably a higher incidence. I mean, we've got a good track record, but there's probably a higher incidence of consumer complaints across the industry. And as a consequence of both those things, the cost of professional indemnity insurance hasn't gone through the roof, but it's gone up substantially. So against that backdrop, in most industries, you'd pass some of that on to the customer. But in reality, in financial services, there's considerable downward pressure on advice fees. There's also downward pressure on asset management fees. So if you look at the stats, there are fewer firms providing financial advice. I think the number was down 8% in 2023. Fewer advisors. There's over 200 less advisors than there were 12 months ago. The fewer support staff in the industry, and there's very little customer growth. So new customers, I think, in 2023 were 2%. So against that backdrop, you've got costs going up, you've got opportunity going down. It's tougher to support it. So that's really what drove the fundamental shift to do the high net worth end and move out of the other area, the network operations, where we could make less money.
So you're going for quality, and also I suppose there's an opportunity, given other players disappearing, you can maybe consolidate the space or press your advantage that you have at the moment.
Yeah, I think what we want to do is we want to focus to a much greater degree on asset management. I think the key number really is that there are 4 million adults in the UK that pay for financial advice out of 20 million adults. So a lot of those 20 million still need to invest money. And apart from having mortgages, the vast majority of them have got pension products. So they still need to invest money, but they don't have a financial advisor. So I'd rather pursue the 16 million market than compete with everyone for the 4 million market. So that's the focus, really. We're looking at providing non-advised asset management capability to retail firms so they can select it as part or all of their centralised investment proposition, and direct to the consumer. So a la Hargreaves Lansdown.
And just to finish, I presume that you concentrate on the quality of the advisors and the quality of the advice they give, and that presumably gives you an edge, if there is an edge to be had in this area.
Yeah, I mean, the reason why we want to do more in the high net worth advice space is because you've got to be better at it. And, we have a very strong and a very good business. And yes, you used the expression earlier, it's quality rather than quantity, because out of that, it breeds opportunity.
And do you actually think that the market appreciates what you're doing and what you've done? I mean, in terms of, £23 million market cap company, we're not up in the FTSE 100 league at this stage, but maybe isn't that a bit low given your position in the market and the type of deals you've been doing?
Well, yes. I mean, the transaction that's just completed is the second time in our short history in which we've sold a subsidiary for more than our market cap. So we've got more cash in the bank than our market cap. So that tells you how difficult it is at the micro cap end of the AIM market to be valued according to the sum of the net parts. So we need to address that on behalf of our shareholders, and we shall.
Well, hopefully this interview will start the process in that respect. But in the meantime, Brian Raven, CEO at Tavistock, thank you very much indeed.
Thank you.